Though global trade momentum remains weak, it is exhibiting signs of recovery and is likely to grow faster in 2024. I would like to mention that, I am making several statements, and the supporting data for all the statements that I am making, all the sentences that I am reading out, the supporting data is provided in the footnotes. So therefore, those of you who are interested can refer to the footnotes for the backup data in support of whatever statements I am making here. So let me just restart so that there is continuity. Global growth is expected to remain steady in 2024 with heterogeneity across regions. Though global trade momentum remains weak, it is exhibiting signs of recovery and is likely to grow faster in 2024. Inflation has softened considerably and is expected to moderate further in 2024. Financial markets are volatile as market participants adjust their expectations on the timing and pace of rate cuts by major central banks, who in any case remain cautious against premature easing in their fight against inflation. Amidst the current headwinds, elevated level of public debt is raising serious concerns on macroeconomic stability in many countries. Now, this is a new point which I am just introducing, which I am talking about in this MPC, because this aspect, I think, is an important aspect and it will impact the future trajectory of global financial stability and global financial system. So therefore, this point I thought I must mention here as a part of the monetary policy statement. Now, amidst the current headwinds, elevated levels of public debt is raising serious concerns on macroeconomic stability in many countries, including some of the advanced economies. Global public debt to GDP ratio is projected to reach 100% by the end of this decade. The public debt levels in advanced economies, in fact, are much higher than those in the emerging market economies. The challenges of debt sustainability in an environment of high interest rates and low growth at the global level can become new sources of stress. Reducing debt burdens is necessary to create fiscal space for new investments in priority areas, including green transition. Now, in this context, so far as India is concerned, going by the budget which has now been presented, I think government is adhering to a path of fiscal consolidation. And as per the projections made by the International Monetary Fund also, India's, that is general government, the debt of both central and state governments are expected to moderate in the years to come. This is just a point of information to put things in the context. Domestic growth. Domestic economic activity remains strong. The first advance estimates placed the real gross domestic product, that is real GDP growth, at 7.3% for 2023-24, that is for the current year, making this the third successive year of growth of above 7%.
All right, so we were listening to the RBI Governor Shaktikanta Das, who has announced that the repo rate remains unchanged at 6.5%. So that being the major point of the press conference at this point. Now,